Hi guys, Akiba here for CryptoSlate. Today I've got Rupert Barksfield from Amulet Protocol. How are you doing, Rupert?
I'm very good. How are you, man?
Yeah, not too bad at all. So, world of DeFi insurance, kind of an interesting space right now with everything that's going on. Amulet's not launched yet, I believe. Is that correct?
No, that's correct. Yeah,
Yeah.
we're launching in Q3 this year. Yeah, especially specifically on Solana, but for the Rust ecosystem, we're a multi-chain solution.
Oh, okay. So I was feeling that it was just Solana based. So, how's that going to work then? So you launching? Are you going to be a Solana token? Like, just give me a look. How does it kind of work? How does that all work?
Yeah, so I mean, giving it a little bit of background on the project as well. So we started back in November of last year. Yeah, the team kind of came together in a few months before that, and we started in earnest. Actually, at Solana Breakpoint was really
Okay.
like our first kind of
Mhm.
foray out into the space, and we saw that there's a huge opportunity on the Solana ecosystem in order to do an insurance protocol dedicated to Solana.
Mhm.
But equally, especially over the last 3 weeks, our kind of our theory's been proved. It like you shouldn't necessarily tie yourself to one particular chain. So we've always had
Mhm.
a very multi-chain vision. But that being said, we've got our roots and our basis in Solana, and we've been supported by them, the whole way through our journey so far, and as we look to grow from there.
So will you be offering Solana outage insurance?
I mean, look, that's yeah, that's you and every other person that asks me about, how do you feel about the outages? Um, in short, no. I mean, look, my personal feeling is that this is no real different to if you go back to the early days of Ethereum, like we saw massive outages with Crypto
Mhm.
Kitties being launched, the DAO, like
Mhm.
we saw the whole chain fall apart and come down so many times. So I'm not super concerned over the long run. I'm more
Mhm.
concerned about the short term, and I suppose my short term is this year. And so as I look towards when our own launch happens, how are we going to operate as a company, if there are outages? Now, for
Mhm.
us, it's a lot easier because we're a pretty slow moving product, right? Being insurance, there's not too many transactions per day,
Mhm.
certainly not many claims and that sort of stuff. So we're not expecting to have too much of an issue if there is another outage for like 24 hours at a time. But it doesn't we need a little bit more confidence as a community.
Mhm.
That's for sure. We need a little bit more supporting. And totally, if you're listening, just give us another podcast. That would be super helpful.
So, what sort of products are you going to be offering then? Because I mean, in the world of DeFi insurance, it was quite interesting when I was doing my research on. Actually, personally, I think I managed to get out amazingly of UST at 99.5. Um,
Wow.
I thought about getting insurance instead, and I think at that point, the thing that actually was the trigger for me was I looked to see what the insurance price was for UST at that point, and it
Mhm.
spiked to like something like 8 or 13%.
Yeah.
And when you looked at that compared to everything else, I actually used the insurance protocols as the indicator for me that I needed to get out and sell,
Yeah.
which I thought was an interesting, also another use for it. Um,
Yeah. I,
um,
I mean, so in terms of our products, yeah, the first one is smart contract risk. So
yep.
that one's fairly easy. As soon as your capital's out of your hands, it's at risk of being hacked or stolen from somebody else's
Hmm.
wallet or protocol while it's staked in there. And so that's our kind of our bread and butter one.
Hmm.
Now that comes with inherent risks as well, insofar that um, there are multiple different ways that a protocol can be hacked, and we can only right now we only provide the insurance for the smart contract. So where Badger DAO was hacked last year, and it was a front end hacked, and I think Nexus were insuring those guys. They ended up not paying out for that because it wasn't something covered by that insurance contract, and
Mm,
that could damage the relationship with your community because
yeah.
they bought it under the wrong pretenses.
Hmm.
Um, the other insurance that we will be doing is stablecoin depeg as well, but of course we'll be looking at the way we do stablecoin depeg insurance with a lot more detail.
Yeah.
And it's a it is a major concern of mine, obviously, when we're looking at protecting stakers' assets. And we've actually got a really interesting way of the way we look after stakers' assets, which we'll come on to in a moment. But we need to be really cognizant, not on I suppose the underlying risk of the asset, but also the team that have created that. For what's come out over the last couple of weeks about, some of the rumors, some of it's all proven about what Doe was doing beforehand, and the fact that this is a bit of a pattern for him. I
Hmm.
don't want to go and comment too much on
Hmm.
that, but my concern is, and when I look at and when our team are looking at things, that we won't have a full picture of information. So we've actually talked about, and so we're slightly going off down a little bit of a track,
Hmm.
involving
Yeah,
our
sorry.
community a lot more to do a lot more digging and a lot more research for us before we list a product.
Okay.
And yeah,
Is
that's
this
one
is
of
this
the
kind of
things that we're
similar to what you were talking about? Someone, I think it was. I remember who it was actually. The gentleman from Ease, I think it might have been, talking about doing like bug bounties for
yeah.
for
So I
looking at
mean,
claims and things.
we're going to do it in a slightly different way, just in our own internal community. But yeah, listening to that spaces that we did the other day with Ease Nexus, Bright, and the Insurace. One of the things that came out of that was this idea of putting together an independent system of people going out and reviewing protocols and generating a universal risk
Hmm.
metric for that. Now, during that spaces, there are people that are for it, people that are against it.
Hmm.
But my personal feelings that I think is quite a good idea, and especially it engages people. And I think if it's independent from the insurers and it's independent from these specific protocols, it's going to be something that's quite difficult to regulate, or at
Yeah.
least you get a big enough volume of opinion around a specific subject that maybe that could work. I'm not sure, but in general, anything that highlights the risks involved with investing in something is really interesting to me and
Hmm.
important for the industry.
Yeah, because I was going to say, because some of the conversations are around kind of an independent body for ratings and such, and I
Yeah.
was kind of feeling that starts to kind of put us back down the roads of like CFI around kind of everything that happened with the subprime mortgages was quite a lot to do with ratings agencies. And there's a lot of that conversation around bias, and I think there's a lot of risks there by going into an independent body that's regulated as a centralized entity.
100%. And I think if we did something like that, it has to be done in a decentralized way.
Mm,
So essentially, it's a risk protocol whereby it is run and executed by its community,
mm.
and it's the community that drives that information into it. And there's some sort of the special tool or mechanism that drives it is how it picks between those community members. So
Risk DAO. You need to launch
a
Risk
risk
DAO.
DAO, risk DAO. I mean, there's actually so one of my previous companies was a company called Pink. We actually started life being called the Crypto Crowd, which is how I got into crypto in the first place. But we use crowd wisdom to understand the value of an asset
Hmm.
and how that would change over time. Now, uh, crypto winter, we had to pivot to regulated assets, and that's how we ended up being Pink and being a little bit, removed from the crypto industry. But the principles are still exactly the same. You get a big enough volume of people, you can get a really accurate answer just through crowd wisdom. And then what Pink had developed was to analyze which independent person or user or identity within inside that group was more accurate on a given time or a given day. And I think, if you apply some of those mechanics around risk DAO,
Hmm.
let's call it, I think there is a really good way of potentially building that. But
Mm. That sounds
that's
interesting.
something beyond that we have to work on.
Yeah, no, definitely. So you talk about where you keep your capital, and I think it'd be interesting to know. So how does your system actually work? So if you've insured a depegging event and there is a depegging event, where's the money come from to pay me back for my investment?
So it all works and one of the reasons why we're on Solana is how as a part of our unique structure. So when you stake inside Amulet, we take that staked capital and we put it into a Solana proof of stake validator, which generates a yield, and it's that yield that we then use to we tokenize it and we use that to pay out claims.
Hmm.
So initial principal capital is protected. We have that layer of barrier plus other barriers in between, which you can go into another time, or you can
Hmm.
read the light paper. But the
Hmm.
essentially you've got these barriers before state capital, which means when there's a payout, what you're risking as a staker is your yield and not your principal. Now,
Hmm.
that means for users who are taking out insurance policies, you're always going to be paid out. And it's that balance that we wanted to build, which you can't have in other DeFi insurance platforms.
So I'm guessing the risk there is that you get too many claims at the same time. So what? So let's say, for argument's sake, there's an absolute catastrophe in the crypto space, and all of the money that has been generated through yield has been paid out. What then happens?
Yeah, so this all comes down to our risk metrics and how we build it in house.
Okay.
So and I want to clarify, this is exactly the same as all traditional insurance as well. So
Hmm.
if there was a catastrophic event and a world of claims, that would take out Aviva or
Hmm.
another insurance company that you can
Yeah.
kind of
Yeah. It's a really valid point. Yeah. Yeah. It's
yeah.
not that DeFi insurance is unstable. It's a nature of insurance. Yeah, I understand that.
Correct, correct.
Hmm.
So typically, the way in which we operate is when we start, we're doing a 1 to 2 risk ratio. So that means for every dollar we have in our treasury, essentially, we can insure $2 worth of policies on the other side. So let's say we've got $100 million in our treasury, we can insure $200 million worth of protocols on that
Right.
side. Once we grow a little bit larger, once our state capacity gets a little bit bigger, once we have more protocols, we will change that risk ratio over time. And if you look at somebody like Nexus, they've got to 1 to 20. We don't think we'll ever get to that stage just because we're a little bit more risk averse as a platform.
Hmm.
But in the region of 1 to 5 or 1 to 10, that's in the way that we'll get to. Now, the likelihood of, let's say we had 10 protocols and they've got $100 million each of them, and we've got $100 million in our staked capital. The likelihood of them all being hacked at the same time is very, very small.
Hmm.
But this is crypto, right?
Yeah.
And we understand that that is a potential risk. So with Amulet, the core differentiation is time. As long as users hold the AUWT token, forgive me, that we mint to pay out users over time, that AUWT token will be worth the value of which they have lost. Now, initially, it will be worth some portion of what they had lost. In this black swan event, I want to be
Hmm.
very clear. This is not on
Yes.
all
Not
players.
the general rule.
No, no. The general rule is like you've insured $100,000, you get paid out $100,000 worth of AUWT. You convert it out, you got your
That
$100,000.
that's really interesting, though. Have you ever thought about offering a kind of a cheaper product that by default pays out slower?
That's a very interesting thought. No, in short, and this is the reason why we have these conversations, right? Because
Yeah.
we want to gather as many.
Because I think that there would be someone that would be willing to pay a smaller like a smaller cost, knowing that
Mm,
okay, it is insured, but if I lose my 100 grand, I'm going to get it back in installments over 12 months. But
yeah,
I pay less for the insurance on that.
I mean, typically, our insurance policies are around the 2% mark anyway. It depends on how complicated and I'm really thinking about smart contract risk here. A, how complicated the policy is, and B, the influx of people purchasing it. Because just like the UST depeg went way high up just before the depeg properly happened, that was because many people were thinking like you. They were
Hmm.
thinking I'm going to buy this cover just in case shit hits a fan, and of course it did. So that's why the price had to go up in order to cover
Yeah, of course. Yeah, that's why I use that as an indicator. It's like, well, if it's like 5 times, and that was the thing. I looked at USDT, which I know has always been higher than say USDC in terms of insurance prices because of all the FUD around it and etc. and people not being sure. And when I looked at it, it was like 5 times the premium for USDT. I was like, yeah, I'm out. I'm done.
Yeah, I mean, look, it's a super unfortunate event. Yeah, many people will say it was bound to happen, and we were all just living off the proceeds of whatever Doe could raise. There's a whole bunch of arguments to say it was all rigged in the first place. It was always going to happen. Like there's so much kind of hearsay around it. But one thing is true is that it's damaged us as an entire industry right now, and it's all we can ever talk about for the next 6 months.
Well, that was the thing I was kind of interested to ask you in that. How does it feel to be part of probably the only part of the crypto space that could arguably be said to be a winner out of this? Because there is an argument for that in that there is definitely, it's got to be one of the biggest use cases that will probably be on every DeFi insurance website talking about what would have happened if you had this insurance during the Terror crisis. It's next Mt. Gox, isn't it?
Yeah, I mean it's a good shout. I think for me as a new protocol in the space where in broad strokes, Terra should have been seen as a real shining light, right? And they have been like for a long time. Yeah, a lot of people bought into this. A lot of really smart funds. I read that post from Delphi the other day about their total exposure to Terra, which actually wasn't huge, but the returns were so big, ended up being a sizable chunk of their portfolio. And you look at firms like that, and you do think, well, they're really smart and they know what they're doing, and so we're going to kind of FOMO and follow them, right? So in terms of like being a new protocol in the space and being caught in the melee, I'm not super happy about it, if I must be brutally honest. But being an insurance protocol at this time, look, I've always said that insurance is great for a bear market. It works, and people are more risk averse. And look, it's not just a bear market for crypto that we're looking at right now. We're looking at a bear market for all markets.
Oh yeah,
and beyond. And I think having an insurance protocol is a huge advantage to that, because we're going to see people in traditional world looking for yields elsewhere, and they've already kind of heard about crypto. They know about crypto. They've seen the Terra stuff and maybe gone, well, look, there's clearly some massive risks that I don't understand. What can I do to protect ourselves? And all of our inflow right now, all of our work. I mean, look, we're not live in 7 until Q3. But we have tons of people contacting us right now, and that's all about wanting cover. Everybody's wanting cover in the space. So we've got, as we go live in Q3, we've got around $1 billion worth of policy cover that we've got to underwrite, and that's my biggest challenge right now is finding that staking capital in order to underwrite it.
Wow, I mean, it's an interesting place to be. I mean, I think I was going to say is, like, the bear market specifically, how does it feel launching into a bear market? Do you feel more at ease because of it, or?
Well, I mean, obviously, I've grown the beard for it. I think I may
Stay
grow it
warm.
out during the bear market. I'm really looking forward to it. Now, we were lucky; we got our raise in, and there won't be so many other protocols and founders out there that would have done that. And raising in a bear market is really, really tough. And look, I've done that before as a TradFi founder, and it's a really tough experience. But it also helps you build knowledge about how to do the process. Anyway, we were lucky. We got our funding. We're in a really strong position, which means that we can get our heads down and we can build, and we can just grow on that, ready for the next bull market. And if you look at people like Nexus, they had exactly the same sort of timeline. Nexus started out in 2017, just before the crypto winter, and they hit straight on into that, and they've done an excellent job. I'm really proud of using them as like kind of a leading light of the DeFi insurance sector, albeit it's still very small, and we've got a huge opportunity to kind of grow into. And I think this is going to drive huge adoption. I hope this drives huge adoption. That's my, not only from a business standpoint, but from just my ethical standpoint of people wanting to protect themselves.
Yeah, definitely. And I think, as you say, it's a great way of getting people to feel a little bit safer with things that they maybe don't quite understand. Have you ever thought about insuring other insurance protocols, smart contracts?
Yes, 100%. And in fact, that's one of the things we are going to be doing a little bit later down the line when we're growing a little bit bigger. But we're a big fan of reinsurance. We're a big fan of cross-chain reinsurance as well, whereby we utilize a lot of our state assets which are in the Solana ecosystem, or at least right now, or initially when we start. And using that to reinsure a protocol over on the Ethereum ecosystem. And that will be definitely something that we do in the future. When it comes out, I'm not entirely sure. I would hope that we get to do it towards the end of Q4 this year.
Really interesting. Looking forward to it. So what's the website? Where can people find out more?
Amulet.org. Head over there, join the Discord, ask us a whole bunch of questions, get involved, and let us make crypto a little bit safer.
Brilliant. Right. Well, before you go, I've got a new segment I'm going to try out with you. You've given no prep to this. It's truly organic. It's called Shill or Fill. Okay.
Shill or fill. Okay.
Okay. So your quest, if you choose to accept it, which you have to, is you can either shill another project that you believe in for at least 20 seconds. So talk about something else, or fill the dead air time with awkward silence for 60 seconds, talking about something non-crypto related that no one's going to be interested with.
I have a terrifying fear of awkward silences, so I'm going to shill.
Okay.
And I'm gonna highlight out my buddy's company, which is
go.
Okay, so Altitude is a product that helps you take your crypto loans and flip them for better rates around the industry, and it does it automatically. It goes bang, 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 bang. And if you're a loan staking partner or loaner on there, it will also get you the best returns. That's Altitude.
Boom! 20 seconds and 20.8 seconds, almost perfect.
That was with no practice or prep.
Right,
I have no idea what the website is, so I can't tell you what it is. But keep an eye on the Twitters.
I'll try and see if I can dig it out and maybe put up on the screen for the video. Rupert, it's been an absolute pleasure. I'm sure we'll chat and meet again. And I'm really fascinated with what you guys are doing in the space, and just DeFi insurance in general. I mean, it sounds kind of a bit dry to some people maybe, but I think I'm on your side here, that anything we can do to help make adoption easier for people outside of the space, it sounds good with me.
Likewise. Thanks, Sam.
Brilliant. Cheers. Thanks.